The Indian pharma race just got interesting this quarter. Today we're peeling back the Q3 FY26 numbers to find out who's truly emerging as the winner: Caplin Point, Divislabs, jbpharma, or lauruslabs. Looking at the Q3 scorecard, lauruslabs takes the crown for sheer momentum with a massive 174% jump in profit after tax. Caplin Point showed steady growth with profit up 18.4%, while jbpharma outpaced the market with a 22% profit increase. Divislabs saw a slight 1% dip in profit, proving that the devil is often in the operating margins. Caplin Point is proving to be a steady compounder, with revenue up 9.9% to 576.5 crore rupees. Their EBITDA margin expanded by 180 basis points, showing massive operating leverage and pricing power in emerging markets. Plus, their US market is scaling fast, hitting 335 crore rupees for the 9 months. The bull case for Caplin is a fortress balance sheet with nearly 2,460 crore rupees in liquid assets. They're executing a 1,000 crore capex plan with zero debt or equity dilution. The bear case? High exposure to Latin American economic volatility and currency fluctuations can make their revenue cycles a bit bumpy. Don't let the flat profit at Divislabs fool you. It was an optical miss. The company took a 74 crore one-off hit for new labor code provisions. If you look at normalized profit before tax, it actually grew a healthy 17.6%, supported by a strong 36.3% EBITDA margin. Divi's core engine remains intact with double-digit API growth, proving strong market share. They are virtually debt-free, but watch the costs creep as employee expenses jumped to 367 crore rupees. Also, a significant portion of their 9-month profit growth came from volatile forex gains. jbpharma is officially beating the benchmark. Their India business grew 12%, outpacing the Indian pharma market's 9% growth. This was driven by aggressive premiumization in chronic therapies, leading to a 22% jump in profit after tax. With a massive 32% return on capital employed and a net cash surplus, jbpharma is a capital masterclass. 6 of their brands now rank in the top 300, including Silicar, the #3 cardiac brand in India. The big unknown? Potential integration risks from a looming amalgamation with Torrent Pharmaceuticals. Lauruslabs just had a breakout quarter, with revenue surging 26% to 1,778 crore rupees. Their heavy capex phase is finally paying off, resulting in a 720 basis point margin jump that proves immense operational leverage as their generics business surged 37%. Laurus is undergoing rapid deleveraging, slashing its net debt to EBITDA from 3.1x to 1.2x in just 1 year. However, the stock is priced for perfection, trading at a high 65 to 68 times trailing earnings. They also face execution risks as they advance into complex CAR-T and gene therapies. The ultimate truth lies in the cash flow. Lauruslabs saw a 617% explosion in operating cash flow, while Caplin Point remains self-sustaining with 188 crore rupees in free cash flow despite heavy capex. Divis is focusing on lean inventory, and jbpharma continues to be a consistent cash machine. In terms of valuation, Caplin Point looks like deep value at a 22.3x PE for a net cash compounder. Laurus commands a high premium justified by its growth, while Divis and jbpharma are priced for their distinct moats in API dominance and chronic leadership. Balance sheets remain the ultimate differentiator here. So which pharma heavy hitter are you backing for FY26? Are you team Caplin Point, Divislabs, jbpharma, or lauruslabs? Drop your pick in the comments below. If you found these earnings breakdowns helpful, don't forget to like, save, and share this video. Follow and subscribe to ZinvestZ. Thanks for tuning in.